traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Monday, June the 29th. We're also going to do our preview for the week. Let's jump to our news items for this week. We have a very important news week coming up. Pending home sales is coming up early this morning at 10. We have Chicago PMI. We have consumer confidence on Tuesday. And we have the Fed chair speaking at 12:30 on Tuesday. Now, really important numbers come on Wednesday. We have the ADP non-farm payroll change, employment change. We have the ISM manufacturing. And on Thursday, we have FOMC meeting minutes. On Wednesday. On Thursday, average hourly earnings, non-farm employment change. This is a number that we're expecting to see increase once again. An employment rate, we're expecting at 12.5, and we're going to see the number of unemployment claims coming up. So this is a really pivotal week. Take this news along with the slowdowns in certain counties and cities throughout the United States because of the recent spike of coronavirus. It's going to make for a very interesting trading week, Now let's look at an interesting trading week based on what we're seeing here. Last week was very interesting. As you notice, we had our up days, we had our down days. On Friday, we flirted staying below the 200 SMA. Market roars back, it rallies back above it. Today, we open up below it again, we rally above it. This is a very key number here. Remember, guys, we keep talking about this 200 SMA. It's a very, very key number. Normally, markets like to dance around this average before they start heading either north or south. This particular instance, it's a 50-50. We don't know if the continual coronavirus spike in the United States is going to be critical to the next leg of this market. Now, it all depends on the analysis of the numbers here in Florida. We're realizing that most of the new cases involve young people. I'm not saying that I'm not saying that it's good that young people are getting it, but what's interesting here is that it's not fatal to younger people, and that's the important thing. So infections without death, it's important. Now, we want to get rid of this virus. So here in Pinellas County, where I live, and in most counties in Florida, now it's required and mandatory to wear a mask wherever you are to try to control the spread of the virus. So this is where the market is right now. As you notice, the market is not overreacting. Remember, the market now is taking pause. This was an overreaction. This is the reaction that the market thought was necessary based on what was being projected. There's a lot of uncertainty about the numbers and what's really going on behind those numbers. So the market is being a little bit cautious. That the market can break down at any moment. Okay, it can break down at any moment, but it can also break up at any moment. So that's where we find ourselves. That's why you need to be cautious. You need to be cautious in these markets. You can't force these markets. You got to be in tune with these markets. You got to read this market like a newspaper. You got to understand the swing high. You got to understand the swing lows. You got to understand the strong resistance and support. You got to understand the areas of breakouts. You need to trade the trends or the runs, whichever the market offers you. Let's look a little deeper into our analysis. As you remember, the market had broken through key channels, through this key channel that we were in for a while. It broke through there. And what happens? It finally breaks through here. It holds. Now it breaks down again, and this is where we find ourselves again. Now we're moving on to the next channel where we will find ourselves at. This is our support level right here, and the market's just churning right along these areas. Now, the good thing about this market is that it has very important areas here, as resistance and support that it can oscillate in between, so that we know more or less where the market can run to on any type of rally. So that's important for us to keep in mind and to try to trade towards those goals or towards those rallies. Let's just jump to our analysis chart here. This is the intraday high of Friday. This is the intraday low. We did have a gap. Market quickly filled it in, and we find ourselves right here. We find ourselves with a compression triangle to the upside. And you can see it here. Here is where all of our buyers are lining up. All of our buyers are lining up, and all of our sellers are offering resistance. This is our resistance pressure. This is our support pressure. So this is where the battle is going to be won or lost today. Any break below this, then our next support level is clear. Any break above this resistance level, then our goal here, or our finish line to the upside. That's where the battle is going to be won today. I don't expect the market to break above this today. It may or may not, but not potentially today. It's more potential for the market to continue a little lower and potentially come down here and potentially break this a little lower and just retest the SMA once again. But that's where we stand right now. Again, don't force this market. First thing we're looking at right now is any kind of pullback to this level here. We're looking to go long. Any break above there, then we're going to ride this short all the way to this level and just wait and see which way the market's going to head. So careful today. Do not force this market. I know I keep saying this from week to week, and I've been saying this for the last several days. It's important for you not to force this market. Look for those precise entries and those levels that are going to where you're congregating all buyers or all sellers, and run with them. Take care and have a great session.